In this lecture, we'll talk about income taxes. All the information in this lecture can be found in the PDF file that you got in Lecture 2, First Things First. Self-employed people are considered both employer and employee to the U.S. government. An employee typically receives a W-2 statement at year-end showing all the taxes that are withheld, but self-employed people and the IRS will receive a 1099 showing income without any taxes withheld. There are several varieties of 1099. Amazon will send a 1099-K in late January for the previous year if you had more than $20,000 in sales. In addition to regular income taxes, self-employed individuals are responsible for paying the self-employment tax of 15.3%. This tax represents the Social Security and Medicare taxes normally withheld from ordinary employees, plus the employer portion of those taxes. The only way to avoid the self-employment tax is to file as an S-Corp, where you must pay yourself a reasonable salary. Then all income over your salary can escape the self-employment tax. This makes sense when you start generating a sizable income from your business operations. An LLC can usually file taxes as an S-Corp by letting the IRS know ahead of time, but check with your CPA first. You should probably also be sending in estimated tax payments quarterly based on estimated income. Generally, if you expect to owe at least $1,000 of taxes, you should pay quarterly because the IRS wants their money sooner than later. As always, check with your CPA. The IRS has published these quarterly payment timelines. Next thing you want to do is create a plan to set aside the money now rather than later. You can create a separate business savings account to escrow your taxes, or simply create an entry in your business checking account called FICA. Set the date to the last day of the previous month. At the end of each month, when you calculate your profit, set aside 30% into the FICA entry. Then update the FICA date to the end of the previous month. At the end of each quarterly payment timeline, you'll have accumulated enough to pay your estimated taxes. Or if you have accounting software like QuickBooks, create a separate liability account called FICA Quarterly Taxes and set your money aside there. Check with your CPA for more details, and remember, always separate your business and personal accounts to further protect your assets. Here's a simplified example of how FBA income is dispersed. If you had $30,000 of monthly sales, you can expect generally the Amazon FBA fees will take up about 33% of that, and the cost of goods sold, which is your inventory, will take up about 47%, leaving you a gross profit of around 20%. Then you have to take out the self-employment tax of around 30%, leaving you with a net profit of around 14–15%. Now, here's a tip. Using the numbers above, you would need to purchase $470 per day of inventory. In reality, you'll see sales rise and fall during the year and peak in November and December, when you could realize up to 40% of your yearly sales. I'll include spreadsheets like this inside the course so you can run what-if scenarios for yourself. Now, tax deductions. The best way to reduce your tax bill is to take advantage of all available tax deductions provided to self-employed individuals. Here are a few examples: office expenses and supplies, computer equipment, PC, scanner, cell phone. You can deduct lodging, food, and conference fees, educational programs, certifications, and even some books. And you can take a home office deduction, which includes rent and utilities. As usual, check with your CPA first. You can also read the IRS publication Tax Guide for Small Business. It has a whole chapter on deductions. Sales and use tax. If you want to purchase inventory without paying sales tax and collect sales taxes on your online sales, you must obtain a sales and use tax permit from your state comptroller. Wholesale suppliers will only open accounts to sellers with sales and use tax permits, also known as resale certificates. State sales tax collection. Be aware that most states where you have inventory stored in an Amazon warehouse will want you to collect sales taxes on your retail sales in that state. Currently, Amazon will not pay these taxes on your behalf. It is solely up to you. Amazon will report how much tax should be collected if you set up your seller account correctly, but you are responsible for sending the payments to the individual states. There are third-party services available to help with this mess. I'll show you how to set up your account to collect state sales tax in the resource section of the course. In the meantime, TaxJar's provided this web page as an intro to sales tax for online sellers. Also, as with your FICA taxes, you should set aside enough money each month to pay your state sales tax when due. So either create an expense transaction in your business checking or create a sales tax payable account in your accounting software. Be proactive with these tax payments and don't get stuck with a big bill when the man comes calling. That should be enough to get you worried about taxes, so let's move on.